Hi guys, my name is Devrhoid Davis and welcome back to another episode of Beyond the Stock Price. So for this episode, what I'm basically going to be doing is actually introducing you guys to one of the investing games that I actually like to play. This one was developed by Robert Kiyosaki, who is the founder and president of the Rich Dad Company. The game is called CashFlow, and it's one of those games that are actually being used to teach financial literacy and investing. In this episode, what I'm going to be basically doing is carrying you through the online version of the game, and then we're going to actually play a round of it. I'll be using one of my own strategies, the capital gains strategy, for escaping the rat race, which is the first aim of the game, and then to achieve my financial goals. And if you guys are interested, then the link to actually participate in the game is actually in the description. If you guys like the video, be sure to click that thumbs up button and press that subscribe button. Then let's get into it.
Alright, so this is a cash flow game. If you guys want to play it, then you can go to richdad.com/classic and it will take you to this page, which is a home page of the game. Now to begin, you're just going to click anywhere on the screen and that will take you to this page where you're going to set up a new game room. Now you'll be able to see other games that you can join, but since this is a demonstration game, I'm going to basically be playing against the computer. Alright, so I'm going to click to create a new game room. I'm going to call it Devrhoid. Has one player, and I'm going to click create here. I'm going to change the name from Best You Pro to Devrhoid and begin game. Okay, so it then takes you to this page, right, where you're able to see the rat race, which is this circular part of the board, as well as a fast track, that's this part of the board. Now the first thing they ask you to do is to actually select your dream. For me, I typically select this dream, which is the preset one that is showing right now, which is a stock market game for kids. Quick side note, CVI is actually developing a stock market game, but not just for kids, for everyone. That will be launched like in the next coming few months. We'll definitely be putting out a video on that when it is ready. But that's the dream that I normally choose. If I'm not choosing this one, then normally I choose the research center dream, which is, just give me a second, I'll just navigate to that one. So either I'm choosing the stock market game for kids, or I'm choosing this dream, which is to build a research center for cancer and AIDS. So because one of my ultimate dreams is to actually build a research and development center in the Caribbean, then I typically choose this dream. But as you all know, I also believe very strongly in financial literacy, so hence CVI. I'm going to go back though to select the stock market game for kids as the dream for this demonstration. So the strategy I'm going to be using for this demonstration is the capital gain strategy. And I'm using the capital gain strategy particularly because that one uses the primary vehicle for escaping the rat race as the stock market. So how the strategy basically works is we build up a lot of cash by trading in the stock market, and then we use all of that liquidity, or all of that cash, all of those funds, all of that money, to purchase income producing businesses or real estate. And that's a simple mechanism of the strategy. For this simulation, you can see that it's already preset with my profession as well as my starting salary and my amount that I have in savings. For a more detailed view of this, you can select the financial statement, which is right here, and it will give you a full idea of what our financial position is. So I'm going to click choose here, and what I'm going to do now is to actually assess my financial position by looking at my personal financial statement. Quick side note, if you guys want, you can actually download a Excel or a PDF version of this sheet from bestupro.com, which is my other website, and the link to that will be in the description below. So let's now take a look at the personal financial statement. We can see here that our income currently is derived solely from our job, which is that of a mechanic. So our mechanic salary is $2,000, or we have no real estate or businesses. Our expenses are as follows. We have taxes of $360, a home mortgage payment of $300, car loan payment of $60, credit card payment of $60, retail payment of $50, and other expenses of $450. All told, our total expense is $1,280. At the moment, we have $670 in savings, so that's why our cash is at $670, and at the end of every payday we get a net $720, which is just the difference of our total income and our expenses. Looking at the balance sheet part of the financial statement, you see where we have our assets, and right now we have no assets. Here their assets are divided into either stock, funds, certificates of deposits, or real estate or businesses. For those of you who know, there are different asset classes, and we actually have an article that talks about why one asset class is not particularly advantageous over another. Again, that link will be in the description. But the assets are either paper assets, which would include stocks, bonds, mutual funds, commodities such as gold or silver, real estate, or businesses. So those are the four types of assets that we consider in the business world. And then for liabilities, notice here that according to Rich Dad, your home or your mortgage is a liability, so are your car loans, credit cards, retail debt, and you may also end up with real estate or business liabilities. As we go through the cash flow game, you will see different examples of these, and I will explain where necessary. Okay, so once again, let me just say what the strategy is. The strategy in using the capital gains method of escaping the rat race is basically to build up our cash reserves to being, say, around $5,000, using that money to buy stocks cheaply, staying in the small deals type of business until we're able to sell those stocks at, say, a multiple of what we bought them for, and then using that increased amount of liquidity to purchase income producing real estate or cash flow producing businesses. So you will notice also that I will spend no time trying to clear my current liabilities. My only goal in employing this strategy is going to be building up my assets in terms of stocks right now, and then in the latter part of the strategy to liquidate those stocks to actually buy real estate or invest in businesses. So with that said, I'm going to end part 1 of the video here, and then when we come back, we're going to actually start rolling the dice to actually play the game. Okay guys, so welcome back to part 2 of this video. So as I already did the introductory part in part 1, so here we're just now rolling the dice. So this is our first roll of the dice to actually see how we fare, and what we're basically doing is just raising this cash or cash position. We're trying to get this to about $5,000. So we'll be ignoring all deals even when they're attractive until we get up to that point. So we're literally just going to be going around the rat race. So I'm going to donate here because I always tend to take this, and it actually gives you some benefits. So I'm going to donate, and you'll see here it gives me the option now to roll either 1 or 2 dice. For this case, I'm going to roll 1 die, and you see we're presented with a small deal opportunity. Well, we're presented with a deal opportunity. It's for us to decide whether or not we're going to take a small deal or a big deal. For this strategy, remember, we're going to be taking only small deals, but not before we actually build up the capital to around $5,000. So I'm going to ignore any deal opportunity at this point. The differentiator between the small deal and the big deal is actually right here, where small deals will cost $5,000 or less, whereas big deals will cost $6,000 or more. As we get more into the game, you'll become familiar with what is actually deemed a small deal or a big deal, or what type of assets are involved in small deals and big deals. So I'm going to select small. Okay, here you see that the card that's presented is that of a stock option. So here the stock is for OK4U Drug Company. The cost is $40. But look at this, it says that cash flow is $0 and the trading range is between $5 and $40. For this strategy, again, what we're doing is we're going to be buying these stocks at their low end and trying to sell them at their high end. I'm going to pass here because, again, we don't have the capital requirement to successfully employ this strategy for escaping the rat race. So I'll select pass, I'll end my turn, and I will select, let me see, I'll select 1 die again, and that was a payday. I'll end. We can check our financial statement. We see that we're currently at $1,190 in terms of our cash. Still not there yet. I'm going to select 2 die, and here we actually pay an expense. So the card we just landed on was an expense card, and for landing on that, we ended up paying some amount of money. In this case it was $200, and what we did was we bought a new tennis racket. Naturally, if you had the option to actually decide whether or not you pay these, you'd probably not do this, but the game isn't designed in that way, so we have to pay it. So I'll end the turn, and because I'm playing against a computer, I can just roll again. Again, we're presented with a deal card. So we'll select small. This one is another stock option. So the stock is for My T4U Electronics Company. The cost is $30, and we see that the stock trades between the range of $5 and $30. Again, we're going to pass. I'll end the turn. Rolling again. Two things just happened. One, we got a payday, but we also landed on an expense card, and in this case we bought a food processor. Okay, end the turn, and I'm going to roll again. another deal opportunity, small again. So this one is a small deal, but this is for a older 3-bedroom 2-bathroom house that's been repossessed by the government agency. It is a cash flowing property, the cost of which is $35,000, but the down payment is only $2,000. But and again, I would actually take this card if we were using a different strategy, but I'm going to pass on this deal for 2 reasons. One, I don't have the cash to make that down payment, although I could take out a liability, I could take out debt to do it, but that again is a different strategy. So in keeping with the capital gain strategy, I will pass on this deal. Remember, I spoke about these cards before. This is a unique opportunity card, meaning somebody is now offering $55,000 for a 2-bedroom 1-bathroom rental condo. If we had this type of asset under our real estate or business asset, then we could sell that property and get the 55, or the difference between whatever we bought for it and the current offered price of 55,000. But we don't have any such asset, so we'll pass on that. Small opportunity. Okay, these are the types of opportunities that we're looking for. Now we are looking for the option to buy the stock at the lowest price possible. I will preempt by saying that $5 is actually not the lowest price possible. There are some opportunities where you might get to buy the stock at $1, but if I was at the capital base that I wanted to be, then I would actually purchase this stock. Because I'm not at the $5,000, and that's a hard target set by me. You're not required to be there to use this strategy, but just for me, I like to have a good amount of liquidity before I go into the stock. So I will again pass on this opportunity. But when I do reach that cash level requirement, that's where I'm actually going to start purchasing these stocks. Again, we land on a unique opportunity, and you can actually see here that somebody is offering $30,000 for each unit that we may have in any combination of a duplex, a fourplex, or an eightplex. We don't have any asset to match that card, so again, done and skip. This card is what I like to call life happens. So this card is the new baby card. So what it's basically saying is that you had a child, and of course that will increase your expense by some amount. In this case, it increases our expenses by $110. So if you look under expenses right now, because we haven't accepted OK, but we have no choice, the expenses do not include a child. When we do click OK, however, a child will be added to our expenses on the financial statement, and here you can see one child costing $110. Roll. Oh, by the way, because we don't have any additional income, you will notice that that brings down our payday from $710, $720 just now $610. Another expense card. You'll notice also that we're getting closer to that cash requirement, right? So say at the next opportunity that I'm presented with, I will be starting to now take the small deals and purchase the stocks. So let's continue. So you'll notice again that we are now at $4,000 in cash. So we have I want to say sufficient liquidity to now start taking deals. Again, I'm going to select to donate and turn here. So I'm going to select a small deal opportunity. Now, because I'm at $4,500 in cash and I have the opportunity to buy this stock at $5, I'm not at my $5,000, but I am going to actually take the opportunity. Reason being, I know that there is an next payday coming up, even though there is a possibility of an expense and another child. So I'll actually elect to buy this stock, and I will buy I'll buy, say, 600 units of the stock. So I bought 600 units of the stock. If you look on my financial statement, you will now see 600 shares of onto you, ON2U, at $5 per share. We're going to repeat this now with trying to acquire more stock at the same $5, even if it's in a different company. We'll also take the opportunity to sell these stocks if we realize that the stocks go to, like, say, $20 or $30. If it doubles, I may not sell the shares, just because I understand that the stock has the potential to do probably 3 times or 4 times the price that I bought it at. So I'm going to minimize the financial statement and end the turn. I'll now select 2 die, and voila. So we would have gotten 1 payday because it came around. So we would have gotten this payday, and we land on a small deal opportunity. Well, we land on a deal opportunity card. I will elect to go with the small deals, and here you see that the stock has now gone to $20. I have 600 units, so I have the opportunity to sell these stocks, even though the trading range is from $10 to $30. I will sell these shares because it will give me an opportunity to buy even more should I end up on a card that sells the stock at, say, $5. So I'll do this deal, but remember, I'm just doing this to build up my capital to start buying big deals or income producing real estate. So I will sell these stocks for $12,000. Okay, I'll end that turn, and I will select 2 die. Okay, and I'll elect to donate. So now that we have all of $15,000 in cash, I can actually start purchasing income producing real estate, but I'm going to actually go for still small deals and try to even compound or grow that capital some more. I might be comfortable growing this capital to about $100,000 before I even start purchasing big deals to actually raise my passive income. This is not something that you have to do. If you're the type of person who wants to start taking big deals when you have this amount of cash, then you can do that. But I'm comfortable having, again, as I mentioned, quite a bit of liquidity. So I'll go for small deals. Okay, so this is a friend who needs cash. I will not take this deal, so I'll pass on this. And the turn, I'm going to take 2 die. Flex buyer opportunity, but I don't have any assets to match that, so I will select done here. End the turn. I'll select 2 die again, and now we have a small deal opportunity. This is onto you entertainment stock, but it's at $30, so I'm not going to buy it because that's the high end. Pass. some other payment. It's fine. Okay, so this is a small deal. It would cash flow $100. I'm not particularly interested in that. The cost for the house is $50,000. I know based on my experience with this game that the most I could sell this house for is $55,000. So I would pay down $3,000. It would generate $100, and the maximum I would be able to sell it for is $55,000. That I don't think is the best use of my funds. So I'll pass on this deal. And here is the opportunity that would actually allow me to sell that house. Mutual fund. Cost 30, trading range between 10 and 30. We would be buying at the high end. We'll pass on this. That's a large expense. By the way, that large expense is one of the reasons why I like to keep a good amount of liquidity. This is a bad deal. This is a condo for sale. It's a 2-bedroom, 1-bathroom. Though it's in excellent condition, this house is going to cost you $5,000 to own it, and you're going to have to end up losing $100 every month off it. So that's not a good deal. And the total cost is $60,000. You probably wouldn't be able to sell this house for $60,000 anyway. Wow. Okay. So a booming market raises the share price of this long time stock. You see, okay for you. Drug company is now trading at $50. This is what happens in a very buoyant stock market. Stocks actually go over their typical trading range. We would not buy this stock naturally. Okay. Let me just check where we are at 8 minutes. Okay, I don't think this is a bad deal, but again, I think we can actually spend $5,000 in a better way. So I will pass on this. Okay, so the stock is at $20. We could make 50% on it, but I'm not going to buy it at $20. I'm looking for the opportunity to buy this stock at either $10 or $5. So I'll pass on this opportunity. By the way, that's another thing that one has to be cognizant of in terms of investing. You have to be willing to actually pass up opportunities, and I say that as opportunities in air quotes, because not every opportunity is an opportunity that you may want to actually take on. Alright, okay, so again, going for small deals. Let's see. Okay, great. So we have an opportunity to buy okay for you drug company again at $10. So, and though the trading range is between 5 and 40, I can actually buy this stock at $10. And I can buy 1,900, but I will actually buy 1,500 units of this stock. and that will leave me with enough liquidity to take up another opportunity should one actually arise. Well, you know, I actually think it is more prudent to buy just 1,000 units of the stock. Going to pass on this. This is a preferred stock opportunity. I'll pass on it. Though it's a cash flow producing stock, again, I don't think that the best use of my funds is to spend $1,200 on a stock that's only producing $10 in passive income. Okay, I'm actually glad we hit this card. So this card is where you're basically downsized. What it means is that you basically, it would be a situation where like you lose your job or something like that, or your business hits a bad turn. What it requires of you is that you actually pay your full set of expenses and lose 2 turns and whatever charity that you would have contributed to. So once you pay this, your cash flow will go down. Your cash will go down by $1,390, your total expenses, and you will lose 2 turns. So your turn skipped, and your cash will continue to go down, by the way. So then you're able to roll again. Okay, great. So we have another opportunity to buy a mutual fund. This time is GRO for us fund, and we can buy it at its low range, which is at $10. I'll buy 500 units of this stock. Okay. And now basically what we're doing is we're going to be going around the rat race, just looking for the opportunity to sell these stocks at their high end, and sooner or later that opportunity arises. Okay, sister-in-law borrows money. I don't think this is a good way to spend money. Emotionally, you can actually do this if you have a lot of cash. Naturally, I don't. So this is an opportunity I will pass. The preferred stock opportunity. Well, this is a different one. Again, pass. But we can actually take a look at our financial statement here. So we have 1,000 units at OK for you. If we sell these stocks at $40, that's $40,000. And then these are 500 units. If we sell these at $40, then that's $20,000. So we're looking for those opportunities at this time. I always donate. And you'll also notice that I am comfortably above my $5,000 cash requirement And again, remember, that's self-imposed. You can play the game with a $2,000 cash requirement, or 1,500 if you're comfortable with that. Just make sure that you have enough cash to cover, say, 1 month of your expenses, provided you happen to hit the downsize button for whatever reason, or to land on that card. Oh, those unique opportunity cards are also unique. Those unique opportunity cards are also unique disaster cards. So in this case, if you were, say, a landlord, if you had an 8plex, this card was basically saying that you'd have to pay $2,000 to repair a broken sewer line. Fortunately, we don't have any assets that match that, so we don't have to pay that $2,000. Okay, so we now have OK4U Drug Company, and the stocks are now selling at $10. I think that's where we bought our original shares. So given that I have $7,000 in liquidity, I am actually in a position to add to this, and I'll add another, say, 500 shares. Okay, let's see, I'll end the turn and then I'll roll again, and we have another small deal opportunity. Let's see what this one says. Okay, so this is for a home real estate purchase, but I don't have the down payment. I'm not going to take out debt for it, so I'll leave that and pass on that deal. Again, downsize. So you want to make sure you have enough cash to right, so you want to have enough cash to be able to cover your total expenses if you happen to downsize. So because I've made sure that I kept enough capital on hand, I am able to comfortably pay this $1,390 from my cash. Turn skipped, so Devrhoid has been skipped. I should also mention that if you can get a group of people together, then you can actually play this game as a group. I think it allows up to 4 persons. Okay, so here's a unique situation. So with this card, we are presented with the stock for MYT4U Electronics Company, which is selling at $5, one of its lowest prices. However, because my cash position is only $2,080, and I know that my total expenses is $1,390, I'll actually pass on this opportunity. Again, we have no assets that meet that criteria, so I will select done. MTY4U stock is now trading at $40. If we had gotten the previous, then we would have been able to sell it at 8 times what we bought it for. But I have no regrets in passing that opportunity, and I'll also pass on this one. This is a good deal, but again, capital requirements, not going to take out debt for it. That's not this strategy, so I will pass on this opportunity. This opportunity allows you to actually pay $5,000 down and acquire real estate, which is a 2-bedroom 1-bathroom house, for $40,000. That would be added to your liabilities, but it would be one of your business liabilities, and the cash flow would be $220, which is not bad. That's one of the higher ones actually, but I will pass on this opportunity. $700. Right, so you'd have been able to, this card would have given you the opportunity to sell that home for $45,000, the same one you would have paid $40,000 for, but you'd have had to give up the rental income of $220. Shares owned, cash flow. This is a CD. I'm going to pass on this. Again, I'm going to pass on this. On to you, but the stock is selling at $40, so we pass. There are only a few things that you're looking for here. You're looking to see whether the stock is trading, whether the stock is really a cash flowing stock, if it is, what the trading range is, and where the current price is. So the cost is the current price, and as you would have gathered, when trading stocks, you're looking to buy low and sell high. So the cost of the stock, or the trading price, the current trading price, is $40. That's an immediate. The only two options you have here are to sell if you already own the stock, or to pass on the opportunity if you don't. And this is exactly what we're looking for. So we currently have 500 units of the mutual fund, GRO for us fund. You can see it here under our assets, 500 units of the share, and we bought it at $10, and now the current trading price is at $40, which is even above the trading range of between 10 and 30. So this is a clear sell sign for us. So we're selling this stock, and we're selling all units. Our next play is to also sell the other stock that we have, and then we're just looking to now purchase income producing real estate to escape the rat race. And voila, there is the opportunity. So the stock OK4U drug company is now trading at $30. Ideally we'd want to sell them at $40, but trading at $30, that's fine. We have 1,500 units of the stock. If we sell now, then we're getting $45,000. So that's more than enough liquidity to say start looking into big income producing assets. So now let's look at our cash position. You'll see that we're now completely out of stocks. Our cash position is all of $68,000. Well, $68,650. Our total expenses amounts to only $1,390. The aim now is basically to just start adding real estate or businesses, income producing real estate or businesses, such that we build up our passive income to be more than our total expenses. And once we would have accomplished that, we would have been out of the rat race. So For this, I will now select big deals. If I wished, I could have actually gone for more small deals and just kept that money growing, but I'm comfortable now with the cash position that I have, so I will now move towards the big deals. Wow. So this is actually something that I would take out debt for, because this is going to produce 3,400, which is well above our total expenses. Even if we took out debt to purchase this apartment house, we would easily be making the monthly payments from the cash flow, and so we'll actually go about doing that. So we're going to take out $7,000 in a loan, and the monthly payment would be $700, but that would be covered by the income from the asset. So now we can see that our total expenses goes up to $2,090, but the cash flow from this one asset is going to be $3,400, which means we would have been earning net. So we buy the asset, and congratulations, we are now out of the rat race and onto the fast track. So that's basically it. That would be the capital gain strategy for escaping the rat race.